This market's really kind of set up for a correction here. Buyers are sitting a good bit lower than where the sellers are right now. So again, we could see several days where we see 1% down days kind of consecutive over 3 or 4 day stretch and kind of work off some of this condition. But markets are doing fine. There's nothing really going on. In fact, let's just talk about what you need to know before the bell this morning. We had this correction last Friday, and with that correction, we saw, a bit of the kind of this pullback in some of the relative strength, that type of stuff. And that correction lasted 1 day on Friday. It was actually 2 days. We actually had weakness on Thursday, and then Friday the market was down that 1 3/4%. Since then, the market has clawed all its way, its way back. It's been a stair step all last week. It was, up 1 day, down 1 day, up 1 day, down 1 day. All the way back, but we're back to testing all-time highs here. And markets, futures are pointing up a little bit this morning. S&P is going to be up about 11 points. Dow's up 129 right now. So we're going to be testing and trying to set new all-time highs today. And of course, that certainly defies that August weakness that we typically have. But just be a little careful with that. Just don't rule out that seasonality just doesn't exist this year. It may not. And not every, when you talk about seasonality, it's about averages. And that doesn't mean that every year is a sloppy year for August and September. It just typically tends to be where weaker trading occurs. So it doesn't mean there has to be a correction, but we've gone very far. We've had a very strong advance since that, kind of April low. Markets are deviated from longer term moving averages. And the thing to really watch here is that money flows have really deteriorated. So the buying, even though the markets are going up, the underlying money flows continue to weaken. And that negative divergence typically tends, to work itself into at least a consolidation. You can kind of see back here just in really June, the market kind of went nowhere because you had that kind of deterioration in money flows, and then finally it turned back up and we started getting money flows coming back in, and that helped support this market rally. Well, right now we're kind of in that process. So the question is, are these money flows about to turn very positive? Well, we're kind of in the wrong time of the year for that right now. So again, this is why I'm saying, this market could just kind of, markets are participating fine right now. They're doing well. And there's nothing really to be overly concerned about. But just be careful here that, if something pops up that really, again, it could be the inflation data this week if it comes in too hot. It could be anything. But this market's really kind of set up for a correction here. Buyers are sitting a good bit lower than where the sellers are right now. So again, we could see several days where we see 1% down days kind of consecutive over 3 or 4 day stretch and kind of work off some of this condition. But we're working back at overbought conditions. You have a negative divergence in momentum. Again, that kind of aligns with what's going on with money flows as well. So again, just be a little cautious here. Don't take on aggressive bets, but remain allocated. There's nothing wrong with the markets. I want to be really clear about that. There's nothing wrong with the market right now. It's fine. But again, there's just some underlying risks that we just need to be aware of. And so just kind of navigate that accordingly. Same thing kind of goes, one thing we've been watching kind of over the last, month or so in particular is watching the dollar, which has really kind of been basing in an uptrend. So again, if that dollar, one of the kind of the underlying problems for the market is if this dollar starts to rally. And again, there's a very, very big short position sitting against the dollar. So again, we could see, kind of a collusion of events. And again, if you take a look at gold as a good example. So gold trades in dollars. So if the dollar really isn't moving anywhere, gold isn't either. And we've just been stuck in the same period of time that the dollar's really been basing, gold's just been stuck in a sideways trading range. So that's because there's kind of a balance right now. But as long as that dollar remains weak, that's helping support support higher gold prices. But if we start to see a strong surge in the dollar, and this is why pay attention to the dollar, anything that trades against dollars is going to be impacted if that dollar really starts to rally for any reason. So just kind of some things to watch. There's from terms of talking about volatility. Volatility remains very, very suppressed here. In fact, we're back to 15 right now. Again, that's not the lowest level that we've had on the VIX, but you have a very, very compressed volatility right now in the market. So again, a lot of speculation. You've got a weak dollar setting up, and then you've got very low volatility, kind of compressed volatility. That's all sets up for a good catalyst for a reversion in the markets. Again, we're not talking about 20%, but a 3, 4, 5% correction in the market would be very unsurprising given the underlying dynamics of the market. So just kind of just pay attention to kind of your exposure risk in your portfolios right now. But that's what you need to know before the bell this morning.